Welcome to the first full week of 2026, and what a busy week it's been in the Murfreesboro and Rutherford County real estate market. We've got all the updates for you. There's been some national news with the current administration throwing out a couple of different ideas about the housing market as well. So we're going to cover those. We're going to recap a little bit of 2026 or 2025 and just talk about the beginning of 2026. So a lot of exciting things going on today. I am John Turner. I am the team lead of the Turner Victory team at Onward Real Estate here in Murfreesboro, Tennessee. And we help people with their real estate needs, not only in Murfreesboro and Smyrna and Laverne and all of Rutherford County, but we actually can help you out all across Middle Tennessee. So if you have any real estate needs, please let us know. Also, if you could please comment below, it helps us out a lot. Let us know where you're listening from. Let us know if you have any questions. We cover this data every week, but sometimes we may not be answering the question that you have about the market. So please, if you have a question about the Murfreesboro real estate market or the Middle Tennessee real estate market, please let us know. But let's go ahead and jump into this week's data. Let me get switched over here if I can. It takes me just a second there. All right, so here is our weekly recap. Current listings for the week, 1,326. That is actually up from last week. We'll talk about that a little bit. And that's because we had 148 new listings this week. But look at these pendings, 94 pendings the first full week of January. So the first full week of 2026. There's been quite a bit of activity. It's not just in the numbers, but in the number of phone calls, texts, emails that myself and our team we've been receiving. I do think that 2026 holds. I just really think it's going to be a busier year. We'll talk about that a little bit more too. There were 52 homes that closed this week. 115 homes were delisted. They were pulled off the market for whatever reason. And in the past 3 months, we've closed out 1,324 homes. The interesting thing over here, whenever you look at the number of pended homes, way over here on the right side of the page, 6.62% of the homes that were on the market actually went under contract this week. That is a jump. So something to keep our eyes on. As we look down here at the charts, this is the active inventory by week. You can see we're starting out the year higher than what we were last year. The blue is last year. We had 1,078. Actually, back in 2024, we had even more inventory than what we had in 2025. But we are up from the 1,292 of last week. So that's some information for you. You look at month supply. We definitely know that we're starting higher this year than what we did last year. 2025, we actually started pretty low. But if you remember, the sales were just pretty stagnant last January and February, and that inventory started building, and we capped out somewhere around 3.8 months supply of inventory last year. So the pendings by week, very interesting. I want to pay a little bit of attention to this because if you look at this, the blue line was last year. So last year, the first week of January, we had 57 pendings. The second week, we had about the same. The first week this year, which that week covered, whenever I call it week one, that week actually covered the last few days of December and a partial week in January, but there were 66 listings versus 57 the week before. But look at this jump right here. 94 listings this week pendings this week compared to 57 last week. That's not double, but that's certainly a huge increase and puts us on track. Just barely below where we were in 2024. I do think we're going to see some trends that are going to take us back to 2024, maybe even 2023 numbers. That's just what I'm looking at this year. And if you look at it, our inventory, as we know, the 300s, 400s are our two biggest areas that we have inventory in. We have a pretty decent size in the 500s, and then we start dropping off. And unfortunately, Over here, there's not much below 300 either. There are 80 homes. Most of those would be townhomes or condos. So we'll get into some of the closed price, original price, and true days on the market in another episode, because really what I want to do is I want to jump over and look at what happened last year in real estate. So if we go down here and look at the closed units, there were 5,362 homes that closed last year. And if you look at this, the average list to sales price was 98.63%. Now, I will tell you that is higher than what it was. We've got some data that we're working on, and we actually have the information. I just don't want to cover it today, where we're looking at the original list price, not the list price you see in the MLS. A lot of times homes are delisted. They either cancel, they get pulled off the market, whatever, and relisted at a lower price. So we've got some information that actually shows us the true list price to sales price ratio. We actually have some information that shows us the true days on the market. The average days on the market for those that closed in 2025 was 34. That number actually is probably about double, but we'll look at that another day, because it's very interesting data. If you like data or you really want to know what's going on with the market, we've got the real information here for you, not just what the MLS is kind of reflecting here. The average sales price across Murfreesboro and Rutherford County was $226 a square foot. The median was $217. So if that gives you any information. And the highest sales price of the year was $10 million. Sometimes people are interested about that. So $10 million was the highest sale in Rutherford County in 2025, and that is residential real estate. That would not include any commercial deals or land deals. Let's talk about some interesting things with the mortgage rate. So the mortgage rates, this chart comes out on Thursdays. And on Thursday, the average mortgage rate, a 30-year mortgage, was at 6.16%, which is pretty close to a 14-month low. 6.15 the week before was the lowest. So really close there. But some really interesting information came out. Actually, the administration, President Trump said a couple of things at the one of them was in the last week, one of them was earlier. But at the end of last week, he talked about he wanted to have, he ordered Freddie Mac and Fannie Mae to buy $200 billion in mortgage bonds. Now, most people are like, well, what does that mean? What does that matter? Well, what he is trying to do is he is trying to lower mortgage rates. And one of the ways that you can lower mortgage rates is when the government starts buying back these bonds. So what happened is, if you look over here on this chart, right here, look at this huge drop from 6.19 to 6.6, or 6.21 to 6.06, just like overnight. Not quite a 0.25%, but about a 15 hundredths of a basis there that it dropped just on the announcement. And actually, depending on where you're looking and what time you're looking, really you saw that go down to 5.99. Just with the news of that, of President Trump ordering these buybacks, it really made the mortgage market move some. So, and that's what he's hoping to do. I think the goal is to get mortgage rates down into the fives and probably keep them there. So I've been saying all along, don't expect threes, but if you're in the fives, it makes it a lot more affordable for a family, especially if they're a first-time home buyer. As a matter of fact, on the average home across the nation, so a $425,000 home, which is average across all the U.S., that rate drop right there, just with the ordering of those buybacks, haven't even been bought back yet. Just the information about that, the rate difference there saves the average homeowner, if you were getting a loan today, $118, just the difference in that rate. So you could see how that really can impact someone who's looking to buy a home. It'll be interesting to see how that trends later on throughout the year. But certainly this administration is focused right now. They've said it out loud, but they're focused on trying to help make homes more affordable. Now, question is, if rates drop too far, does that create this feeding frenzy and then all of a sudden causes prices to go up, home prices go up? And, that's a real possibility. And people will argue that, you got to be very careful because it could have a negative effect on the housing market and make it even tougher. And I get that. My personal opinion is if rates stay in the 5, it will not create a feeding frenzy, but it will help people be able to afford a house. But the other thing it will do is it will free up some inventory. We need more inventory. It may not seem like it, but we need more inventory. So hopefully what that will do is the people that are sitting on their 3% mortgage rates, it will be close enough, if you're at 5.5, 5.75, that they can justify moving up into another house or moving down or whatever it is. But a lot of people would put their lifestyles on hold because of the affordability issue. So I really can see where that would free up some of the inventory, which a lot of it would be in that starter home price point. It also, I think, will give the builders some confidence here where they may start building more because a lot of the builders have pulled back. And, I've talked about that on the show before that we got to be very careful because with builders pulling back, whenever the market does take off, the builders are not going to have enough supply and it's going to actually tighten up inventory and could increase home prices. So hopefully we slowly work into this and hopefully mortgage rates do decline slowly. People ask me, well, what does this mean if I'm looking to buy a house? Well, if the way I think things are going to works out, and again, I tell people I have a crystal ball. It's cracked, so I may get it right, may not. But most, so many of these people who make predictions get it wrong too. But I study this data, so I feel like I know a little bit more about this than maybe some people. But I really think if I were looking to buy a home and I could afford one right now, I would probably go ahead and do that because if inventory does tighten up because mortgage rates decline, you are already in your home. And if mortgage rates decline, then you just go ahead and refinance. So you still get the benefit of the lower mortgage rates, but you also get the benefit of hopefully at the lower price. Now, if there is a huge influx of inventory at any point, then prices could decrease and maybe you bought a little bit higher than what you could have. But if it's me, I'm willing to take that chance because I think the scenario that I laid out is probably more likely than prices dropping a whole lot, even though they have dropped some in our area. But right now, we're down a percent or something, which in the whole scheme of buying a house and holding it for several years, 1% is not much at all. So let's talk about the one other thing that President Trump put out there. He is wanting to ban institutional investors from owning homes. So he's basically wanting to take these REITs, which are the real estate investment trust, and not allow them to buy residential homes. Now, you can argue that, free market, you can argue, there's all sorts of arguments, pro and con on this. So I'm not here really to debate that, but I am here to give information. I do know, and I have not gone through and searched all the tax records in Rutherford County. That's just a huge task and have not done that. But I do know that at one point back in 2022, nearly 10% of the homes in Rutherford County were owned by real estate investment trusts. So about one out of every 10 homes, which is a lot. And whenever they start selling a lot or buying a lot, that really can move the markets pretty quickly. The other thing is between 5,000 and 8,000 homes at any one time in Rutherford County are owned by investors. Now, here's the thing you've got to realize is that there are more investors, mom and pop investors, people who own 5 investment homes or less. There are more of those, and they own more homes than these big real estate investment trusts. So it really depends on the wording and number one, even if it's legal. I mean, I don't know if you can restrict people from buying homes or not. That's one of the things that have to be decided. But whether it's legal or not and whether it works, a lot of these big real estate investment trusts are not buying right now. The market conditions are not right for that. So it's not really impacting our market right now. But it could in the future, depending on how that goes. So that's something we're going to be keeping an eye on as well. I probably should have already switched over here so you can see me a little bit better instead of look at that chart. But anyway, that's really what's going on in the market right now. One other thing I did want to show you. Let's go back to my charts. I know that's the reason why I still had this over here, is because I want to show you one other chart that I have down here, which I think is pretty interesting as well. So this is yearly closings and for Rutherford County, and it goes all the way back to 2000. So in 2000, we had 3,767 closings in Rutherford County. We peaked over here in 2020 at 8,274. That was the most that we had, and you could see, and probably in 2021 we would have sold even more. We just didn't have the inventory. And then you could see the decline. But a couple things I want to point out. First of all, look at this arch right here from 2022 to this year, or to 2025. I see some similarities over here from, remember in 2006 we peaked, and then 2007 we started dropping. This was 4 years of a drop, but it was a huge drop. And I say it was 5 years, but 4 down here kind of near the bottom. We've got 3 years right now that we've kind of been at the bottom. And I see my crystal ball has this curving out of this now. I believe that we're going to look back in 2025 is going to be the bottom of the number of units sold in Rutherford County for this cycle. I believe that we're going to go back up. If I look over here and kind of see how this worked, and if I discount this very bottom one, because I feel like that was a unique situation, and put this at the 2010 number, the next year you kind of bounce back even higher, because the bounce back is usually quicker. So you bounce back even higher than the 2009 number. So 2009 you had 3,760 closings, but over here in 2012 you had 4,114. So I think this bounce back is going to be higher, and I feel it coming on. There's just something about I've been feeling this for about a month or so, just with the data, with just the day-to-day operations of what we're doing in real estate. I believe our bounce back is going to come back, and I believe we are going to exceed the 2023 sales number of 5758. So I think we're going to end up somewhere around the probably 6,000 units sold. I don't think we're going to get back up to 22 numbers, but I really do think we're going to be somewhere in there by the time it's all said and done. Now, with that said, anybody can predict anything, and I can sit here and make predictions all I want to, and they may come true, may not. But I do really feel like, based upon the data, that that's about where we're looking at now. So whenever people ask me, well, what's going to happen with the market? That's what I think is going to happen. I think there's going to be enough demand that it's going to help prices keep from dropping much further. I do think we do have a little further to go with our prices, and not even so much with the overall sales prices, it is the concessions. But I could see us dropping another 1 to 3% early part of this year. But as these mortgage rates may take effect, they may not, but affordability is getting a little bit better. That's where I think we're going. So I think we'll see whenever we look back on the data for the fourth quarter, I think we're going to see a 2% drop from the third quarter, but we won't have that data until March. But then I think from there, we may see a drop in the first quarter this year, another percent, maybe not. But I guess what I'm saying is, from a price standpoint, if you're a seller, I feel like the worst is behind us. If you're a buyer, I feel like from a mortgage rate standpoint, the worst is behind us. So there's good news on either side if you're looking to sell or buy. And by the way, if you're looking to sell or buy, we can help you. So make sure to reach out to us. Again, I'm John Turner with the Turner Victory Team of Onward Real Estate. Myself and my team, we would love to help you with any of your real estate needs in Murfreesboro, Rutherford County, or Middle Tennessee area. We do like to use this data to really guide you through the process. So not only do we know the market, we work in it every day, but we back it with data as well to help you make informed decisions. We want to help you clarify the whole decision-making process. So reach out to us. I appreciate you joining us this week. Until next week, I hope you make it a great week. And again, we'll see you next week. Thank you for tuning in.